Good morning, everyone. It's Monday, the 20th of July, 2020. I'm Rob Murphy, Head of Financials at Edison, and today we have Tungsten Corporation with us, and I'm delighted to present Andrew Lemonofides, who's the CEO, and Chris Allen, who's the CFO of Tungsten. So let's kick off. Some people may not know Tungsten that well. What services does Tungsten provide, and how does it generate revenue?
In terms of service, Tungsten is sort of a leading provider of global electronic invoicing and purchase order transactions. Now that means we have the world's largest compliant sort of business transaction network. We provide sort of the digital foundation that connects our AP buyers with their suppliers, who we onboard onto our network, and vice versa. Now that enables invoices to be transmitted electronically. They flow through the Tungsten system, and it allows us to check those invoices for compliance. The reason we want to do that is we use rule-based software, and having a compliant invoice means it's able to be submitted through the buyer's P2P system, and it enables straight-through processing. For those invoices which fail, we have an exceptions management process, and we obviously offer complementary solutions such as workflow and trade finance. The benefit for an AP buyer is really centered on cost reduction of processing invoices, and for the supplier, it means they get payments faster. On your revenue question, 94% of our revenues are repeatable and recurring, as we actually charge fees for all transactions that cross our network. And we also charge annual sort of membership fees and setup fees. And in addition, we have charges for services such as archiving.
And also, you're quite a new team at Tungsten, and in July last year, you announced a revised strategy. And Andrew, you joined back in September with the remit of accelerating the implementation of this strategy. Maybe you could just explain what the main elements are of that strategy now.
Sure. Yeah, it's certainly been a very fast time since September. It's probably worth reiterating that firstly, we've got a sort of an international blue chip sort of client base who've adopted our system, but we've still got very significant opportunities with them because they still, on average, have around 70% of their invoices that are not electronic. They're either paper or PDF. Equally, there are many other organizations today that don't have a relationship with Tungsten. So our goal actually with our clients is to realize sort of 100% invoice digitization, accommodating all of their suppliers regardless of size. So that's really the first part of the strategy, is our existing and new customer base. Outside of that focus on the core market, there's probably three initiatives that I'd like to quickly talk about. The first one was what we called expansion into total AR, accounts receivable. Our focus has been on the connection of our AP buyers to their suppliers, but equally there's an opportunity, because they're on the network, to connect our existing suppliers with the buyers that they work with. That's about having a solution to manage your cash with really unmatched visibility of sort of the reconciliation process. Our second strand of the strategy was what we called interoperability, also interconnection, because essentially it's moving from a proprietary network to one where we interconnect with other networks. We increase the number of AP buyers and suppliers. That drives what I would call the network effect. That's important because you'll remember when we talked about the way we charge, we charge for all transactions that pass over that network. And the final part of the strategy is really to invest in what I would see as ancillary products and services, one of which would be something like trade finance. Now that's designed to improve cash flow, and it also improves the way that companies sort of do business. So here what we're looking to do is build out our offerings through a series of partnerships which are going to become increasingly important to our business. Our sales strategy is focused on driving the maximum return from both direct and indirect routes to market, and we're continuing to look for partner opportunities that are going to allow us to increase our scale quickly by allowing us ready access to greater numbers of AP buyers.
just coming back to the sort of more recent issues we've had with the pandemic and everything, what have you learnt about the business at Tungsten in the course of this?
On a personal level, I've got to say, I've learned a huge amount, both actually about the market and my own team. And the one thing I've seen is my team is incredibly resilient. I moved the company to globally to work remotely, and we've seen productivity levels really improve. So for us as a team, COVID has actually been the catalyst for us to really understand the new way of working going forward. That was really important because it meant that we have been resilient to COVID, but it's also important to recognize that we're not immune. And for our clients, I believe that COVID has provided what's best called a wake-up call, because global lockdowns have forced the closure of many operations that were receiving those paper and PDF invoices. That's impacted the ability for AP buyers to pay, and that at a time when maintaining supply chains and cash flow were critical. So as we exit this lockdown, a legacy, I think, from COVID, well, I believe it's a renewed sense of urgency to accelerate the digitization of invoices and to reduce the potential impact of any future lockdowns.
Yeah, absolutely. I think we're seeing these accelerations across a number of businesses at the moment. Chris, you've put out your year-end trading statement today. Mm-hmm. Are we seeing evidence of the new strategy coming through?
Well, yes, I think we are. I think we're pleased with our progress in what was a year of transition. So firstly, I think although new sales billings were flat on the prior year, we saw good acceleration in the second half, which reflected some new business wins to our new Total AR product that Andrew referenced, which we brought to market last year. As Andrew said, we've also been keen to expand our partnership footprint to broaden out our sales route to market strategy. And we're pleased to have concluded our largest ever partnership deal with a major US bank. And having decided to close our network finance business, we're delighted that our new supply chain finance partnership with Orbion is starting to bear fruit. And we managed to sign up a major UK retailer to offer early repayment services to their supplier base. So the partnership has become revenue generating, and that's something we're very excited about.
And how do you see the outlook for sales, revenues and cash flow, given that we are in an uncertain environment at the moment?
Yeah, you're absolutely right. It is very uncertain. And I think that the word I want to pick up on that Andrew used earlier was resilient. And I think, the business has weathered what was basically a global economic shutdown pretty well and has proved resilient. And I mean, we have experienced a reduction in the number of transaction volumes we process on our network since April. But these run rates have started to recover following lockdown restrictions being eased, which I think is testament not only to our blue chip client base, but also to our diversified sector coverage. It's clearly difficult to predict with certainty what's going to happen in the future, but we expect run rates to recover over the second quarter and return to normal levels by the start of the second half. I think it's worth emphasizing, we've traded profitably in the first 2 months of the new financial year, and we continue to manage our cash flow very carefully. As a precaution, we drew down on another £1 million of our RCF in March, but that was merely precautionary and it's been unutilized to date. So I think, we enter the new year in good shape.
And of course, we've got the short-term uncertainties, but there's, I guess, the longer-term opportunity in e-invoicing. Maybe Andrew, maybe you could scope out what that opportunity is longer term.
Absolutely. That is really what is very exciting, I think, for Tungsten, is that untapped opportunity I talked about within our existing clients, but also the compelling solutions we have to attract new clients. Also, it's the fact that this COVID experience, what it's done is it's underlined the importance of cash flow, payment cycles, and managing those supply chains. So that acceleration means that we believe we will see a much greater push to digitize invoices. But then there is this broader space to compete in, which when you're focused on the digitization of invoices, you are also interested in the ancillary products like, as Chris has mentioned, the supply chain finance. So we see that as a very exciting future for the company. And I think as I look back, you know, on my first sort of 9 months, I think we have a very, very good case for investing within Tungsten. I think it's strong. If you think about it, we've got an international sort of blue chip base, which includes companies like GSK, Unilever, P&G, and also the US government. We've got significant recurring revenue with strong sort of future visibility. And our platform is fully invested. You know, it represents a significant scaling opportunity in our market. So for us, you know, the future is very exciting.